What if I told you that right now, as major financial institutions and hedge funds are cautiously dipping their toes into the cryptocurrency waters, a small nation in Central America is quietly executing a financial strategy so bold, so unprecedented, that it could either bankrupt its treasury or redefine the very essence of national economic sovereignty for the 21st century. And the most shocking part? They're doing it by buying what most of the world still sees as a volatile, speculative asset, just 8 coins at a time. Call to action. But this isn't just a story about buying Bitcoin. This is a live case study in economic rebellion, and to understand the sheer genius or madness behind it, you need to see the full picture. So, do me a favor, hit that subscribe button and smash the like button right now, because what you're about to learn will completely change how you view the future of money and national power. The narrative that often gets spun in mainstream financial media about El Salvador's Bitcoin adoption is one of reckless speculation. A high-stakes gamble by a maverick president with his country's fragile economy. This framing, while dramatic, is a profound and almost deliberate misunderstanding of the deeper, more calculated game being played. To truly grasp the significance of this latest purchase of 8 Bitcoin, bringing their total holdings to a staggering 6,375.18 coins, we must rewind the tape and look at the origin of this national project not as a financial whim, but as a strategic response to a deeply entrenched problem: economic captivity. For decades, El Salvador's economic reality was not defined by its own government's policies in San Salvador, but by boardrooms in Washington, D.C., and the hallways of international financial institutions. The nation was shackled by its reliance on the U.S. dollar, a currency it could not control, print, or leverage. Every economic decision was filtered through the lens of the dollar's strength or weakness. When the U.S. Federal Reserve decided to engage in quantitative easing, printing trillions of dollars, it exported inflation to dollarized nations like El Salvador, eroding the purchasing power of its citizens without any democratic recourse. When the Fed tightened monetary policy, capital would flee emerging markets, strangling economic growth in nations that had no monetary tools to fight back. This was a form of financial colonialism, subtle and insidious, where the economic destiny of a nation of 6 million people was held hostage by a currency it had no say over. The second, equally crippling shackle was the remittance economy. Nearly a quarter of El Salvador's GDP comes from its diaspora, primarily citizens working menial, back-breaking jobs in the United States and sending money back home to their families. This lifeline, however, came at an extortionate cost. Traditional money transfer services like Western Union and MoneyGram would siphon off a significant percentage of every single transaction, a brutal tax on hope and survival that collectively amounted to hundreds of millions of dollars, annually being stripped from the pockets of the Salvadoran poor and funneled into the coffers of multinational corporations. It was within this context of monetary subjugation and financial predation that President Nayib Bukele's government made the audacious decision to adopt Bitcoin as legal tender. The move was never about getting rich quick from a bull run. It was a strategic, long-term play for monetary independence. By integrating Bitcoin into the financial system, the government aimed to create a parallel financial rail, one that operated outside the control of the U.S. Federal Reserve and bypassed the predatory remittance industry. Imagine a Salvadoran construction worker in Los Angeles. Instead of paying a 10% fee to wire $300 home, he could now send the full amount instantly for a fee of a few cents using the Lightning Network. This wasn't just a convenience. It was a direct wealth transfer from corporate middlemen back to Salvadoran families, a revolutionary act of economic empowerment. The initial rollout was by all accounts chaotic. The Chivo Wallet app faced glitches, there was public skepticism, and the international financial press had a field day predicting an imminent catastrophe. The price of Bitcoin itself was volatile, and when it entered a brutal bear market, the narrative seemed to be confirmed. El Salvador's gamble was failing. But this is where the conventional analysis failed most spectacularly. They were judging a long-term, multi-decade strategic shift based on quarterly price charts. They failed to see that for the Bukele government, the day-to-day price was almost irrelevant. What mattered was the accumulation of a new national strategic asset, the building of infrastructure, and the slow, steady onboarding of the population onto a new financial system. While critics were obsessing over paper losses on a spreadsheet, the Salvadoran government was building Bitcoin-powered schools, installing Bitcoin ATMs, and laying the groundwork for a geothermal Bitcoin mining operation powered by the nation's volcanic resources. They were playing a completely different game, on a completely different timeline. The consistent dollar-cost averaging style purchases, even of just 5, 10, or 8 coins at a time, were not attempts to time the market. They were a disciplined, relentless affirmation of the strategy. Every single coin purchased was a brick in the foundation of a new financial system, a tiny declaration of independence from a global order that had kept nations like El Salvador in a state of perpetual economic adolescence. This is the crucial context that makes the latest purchase of 8 Bitcoin so significant. It's not the amount. It's the unwavering consistency. It signals that the strategy remains intact, unfazed by short-term market sentiment or international criticism. It is the quiet, confident ticking of a clock that is counting down to a very different financial future. So, if the first phase was about breaking the chains of dollar dependency and remittance predation, this new chapter, underscored by the relentless accumulation of Bitcoin even during market tranquility, is about forging an entirely new national identity on the global stage. An identity built not on traditional exports or geopolitical alignment, but on technological sovereignty and financial innovation. The world is now witnessing the emergence of what can only be called the Bitcoin nation, a concept so radical it forces us to reconsider the very pillars of economic power in the 21st century. Think about the traditional metrics of a nation's economic strength: its gross domestic product, its natural resource reserves, its industrial output, or the size of its military. El Salvador, by embracing Bitcoin as a core national reserve asset, is adding a new digital metric to that list: its Bitcoin treasury. With 6,375.18 coins, valued at approximately $649 million, this treasury is more than just a line item on a balance sheet. It is a strategic geopolitical tool. It represents a store of value that is globally liquid, cannot be frozen by any foreign power, and exists entirely outside the control of the international banking system that has historically dictated terms to developing nations. This is the ultimate insurance policy against external economic coercion. Imagine a scenario where a future U.S. administration, disapproving of El Salvador's domestic or foreign policies, decides to apply financial sanctions, a common tool of modern geopolitical pressure. In a traditional dollar-dependent economy, such sanctions would be catastrophic, instantly severing the nation from the global financial bloodstream. But El Salvador, with a growing Bitcoin treasury and a parallel functioning Bitcoin economy, now possesses a potential countermeasure. They could, in theory, continue to engage in international trade, settle accounts, and access liquid capital through Bitcoin channels that are inherently resistant to censorship. This isn't about evading legitimate laws. It's about asserting monetary sovereignty and removing the ability of larger powers to wield the dollar as a weapon of economic strangulation. This strategic positioning is already beginning to attract a new kind of attention and a new kind of citizen. The narrative of the Bitcoin Beach experiment in El Zonte has evolved into a national magnet for a global diaspora of Bitcoin developers, entrepreneurs, and freedom-minded individuals. We are seeing the early tangible signs of a brain gain and a capital influx directly tied to this policy. Tech entrepreneurs from North America and Europe are relocating to San Salvador, not for a lower cost of living, but to be at the epicenter of this real-world monetary experiment. They are starting businesses, investing in local real estate, and contributing their expertise to building out the nation's digital infrastructure. This influx of human and financial capital, all catalyzed by a commitment to a cryptographic protocol, is something no traditional IMF loan or World Development Bank project could ever hope to achieve. It is organic, decentralized, and aligned with a shared vision of a more open financial future. Furthermore, the government's move into Bitcoin mining, powered by volcanic geothermal energy, is a masterstroke that transforms a national liability, its location on the Pacific Ring of Fire, into a profound competitive advantage. They are literally turning the Earth's molten core into a source of pure, digitally native energy that is then used to secure the Bitcoin network and further augment the national treasury. This creates a virtuous cycle. Volcanic energy, a renewable and previously underutilized resource, is harnessed to produce the hardest money the world has ever known, which in turn strengthens the nation's financial independence and attracts more talent and capital. It's a closed-loop economic system that bypasses traditional intermediaries entirely. Of course, the path is fraught with immense risk. The volatility of Bitcoin remains a sword of Damocles hanging over the national treasury. A prolonged crypto winter could see the value of their reserves plummet, creating significant political and economic pressure. The success of the entire project is also inextricably linked to the political fortunes of Nayib Bukele himself. Should a future administration reverse course, the experiment could be abruptly halted. And there are legitimate social questions about imposing a still nascent technology on a population where digital literacy is not universal. Yet, despite these risks, the world is watching. Other small nations, from island states in the Caribbean to nations in Latin America and Africa, are observing El Salvador not as a cautionary tale, but as a potential pioneer. If this model proves successful over the long term, it could trigger a wave of micro-monetary revolutions, where smaller countries opt out of the dollar-dominated system in favor of a decentralized, neutral, and global reserve asset. The purchase of those 8 Bitcoin last week is therefore a signal flare. It tells the world that El Salvador is not retreating. It is doubling down. It is betting its future not on the promises of foreign powers or the whims of international bond markets, but on mathematics, cryptography, and the unyielding belief that in the digital age, true sovereignty begins with sovereign money. So what do you think? Is El Salvador's Bitcoin strategy a visionary blueprint for the future of national economics, or a dangerously naive gamble that will end in financial ruin? The experiment is live, and the results will affect the entire world. Let me know your detailed thoughts in the comments below. I read every single one. And if this deep dive into the real story behind the headlines opened your eyes, share this video with someone who needs to see it. Until next time, stay curious.